Someone was asking me this morning the difference between leverage and margin. So in this video, I'm going to differentiate it for you, and I'll also show you the advantages and disadvantages of leverage. For margin, you have to be using margin. So I'll place my phone here, and at the end of this video, if you have any questions, you can just comment down below. I'll also leave my WhatsApp number. If you want to buy USDT, you want to buy Bitcoin, Ethereum, or you have someone sending you any cryptocurrency abroad, I'll just buy it from you and send you the money within 1 hour or 30 minutes. So for us to differentiate between leverage and margin, let's load up our trading account. So for us to load our trading account, we click on the features button. So you can see we have home, market, trade, features and wallet, right? So I'm just going to click here. Now I'm going to transfer the money into my account. So to transfer the money, I'll click on this particular place here. We have the 0.00 USD. I'll just click here. This morning we took a BTC trade and we made like almost close to $200. The only difference here is I'll move the money to my features account right now. So let's say I'll just move $1,000 inside. Perfect, right? So after moving the $1,000 inside, now the $1,000 becomes our collateral. It becomes our margin, right? It becomes our margin. Now, when you are going to take the trade, there is an amount that you use to take the trade, to invest in the trade. So the amount that you are using to invest in the trade becomes the margin. The difference between the amount you use to take the trade and the amount still left in your features balance is called the margin ratio. So I'll just take a simple trade and show you how it's done. Now we have our take profit and stop loss. The take profit is where you want to exit the market if the trade is going well for you. So maybe right now Bitcoin is currently $58,036. If we are thinking Bitcoin will go to 60,000, then 60,000 becomes our take profit. If we are going to use this as an opportunity, we need to ask ourselves whether if Bitcoin goes against us, what we are going to be doing, what we are going to be risking. You see, what most people don't understand is in life there is always price to be paid for anything that you do. So whether you like it or not, if you go out to buy pure water or to buy anything, you will have to pay the price for it. The same thing with trading. If you are thinking that Bitcoin will go to 60,000, you have to risk something to get to 60,000. So right now the current price is $58,068, right? So if I am going to risk it, I'll be asking myself, in the $1,000, how much am I going to risk to get Bitcoin to 60,000? So now I can say like I'm going to raise an amount of $50, and if Bitcoin goes to 60,000, I can make an amount of $1,000 or $1,500. So let's just use this as an example. So I'll use the margin. Remember, in forex trading, the margin is the lot size. The lot size is how much you are using to take the position. So I was saying that I'll just use $50 to take the position. Now the leverage comes in. The leverage is how many times you are multiplying your margin. So for example, if I am using 50 USDT to take the trade, now the leverage will multiply the 50 USDT times 125x. Usually it's good for you to use leverage if you don't have enough money. So for example, if you have $500 or $200, you will have to use bigger leverage to be able to cash out big time. So I am having $1,000. I can still decide on how much I'm going to use to take this trade, and I'm saying I'm going to use 50,000. My current prediction is that Bitcoin will go to 60,000. When we say that a particular token is going to a particular price, don't think it will just go straight. Right now Bitcoin is 58,000. Bitcoin can decide to go to about 59,000, come back to 40,000 before it will go to 60,000. So you always have to ask yourself this question. Now what I'll do is I'll enter buy long, right? So I just click on the buy/long here. Have you seen it? Buy/long. I was telling you that the margin ratio becomes the amount you use to take the trade. We have open orders and positions. So because I've just entered a trade, I've not added my take profit and stop loss here. So I'll click here, positions. After clicking on positions, now I'm going to click on TP/SL. Just follow the instructions here. So I click on TP/SL, then I click here. We are saying that Bitcoin will go to 60,000. That's our prediction. So if Bitcoin goes to 60,000, I'll be making $193, right? Now we are risking $50 of the $1,000 to get Bitcoin to 60,000. So I can write $57,500 here. Okay, so that will be, we can use a stop loss of $600. Let's do something like this. 620. Okay, so now if Bitcoin falls down to 57,620 USD, I'll be losing an amount of 51 USDT. Now if Bitcoin is able to go to 60,000, I'll be making $193. So this is how trading works. If you are risking $50, you should be able to make 3 times of the $50. So if you are having a particular strategy, the strategy that I'm using, it gets me 1:3. So meaning if I'm risking $50 on this trade, I'll be making $150 back. So that's just a perfect example here. So have you seen that this is the current trade that we just took? Okay, I'll place the phone here for you to see. Now we have our P&L here. The P&L shows how much you are currently making on the trade. This is the margin where the money that we have invested on the trade. Then we have the margin ratio being the amount that you are using of your collateral. So with the $1,000, I've used 2.38% of the $1,000. The margin ratio, it works like a speedometer. Once your margin ratio is more than 10%, close the trade and take it again. For you to close the trade, you click on close here, then you click on 50 if you want to close 50%, or you can click here if you want to close 100%. Now we have what we call the marked price. The marked price is the current price of that token. So right now the marked price of Bitcoin is 58,174. You can see the marked price is always changing. Then we have the entry price. The entry price is where we took the trade. Once you enter a trade, don't adjust your leverage. So if I click here, you can see we can even reduce our leverage to 75x, 100x, and 125x. Never adjust your leverage when you take a trade. We have our TP here. Our TP is the take profit, then our SL is the stop loss. So if I want to close the trade again, I'll just click on close here. Then I can click on confirm to close the trade. So once you click on confirm this particular place, you are closing the trade. So this is how margin and leverage works. Leverage is the amount of margin multiplied by the number of times you select the bar. So right now my leverage is here, and before I forget, the last thing that I'll explain is the cross and isolated margin. I'll be teaching you this one in the next video. So if you have any questions or you want to receive trading signals like this, make sure you click the first link. You can easily make $100 to $1,000 just by using the strategy that I've shared with you in this video. Take care and see you in the next video.